या कुछ आईटी में कर सकते हैं, ये आ जाएगा तब तक देखते हैं.
Life. All right, welcome guys. Thanks for tuning in to Bulls, Bear and Banter. I'm Hersh Sayta, with me Puneet Javeri. We'll very shortly be joined by the very busy Sajeet sir. He'll be joining us as well today. But lots happening in markets. Nifty IT continues to be under pressure, and we'll talk a little bit about that because Puneet always has a perspective on IT and auto. And because he's around, we'll take opportunity to take views on both of those, IT and Ola Electric. But that's on sectoral. I mean, overall as well, markets seem to be under pressure today, and this is now the third straight day where we're seeing slight bits of pressure on the market. So we're seeing a larger consolidation which is currently at play when you're looking at it a little bit zoomed out. The Jane Street saga continues. There's 4,800 crore now being deposited in escrow with SEBI by Jane Street. So that has happened. And developments around that will also be important, even though the market as such, Puneet, is not reacting to it. It didn't react to it on the day Jane Street, on the day SEBI pulled up Jane Street and delivered its verdict. It's not reacted to it even today. So all of that seems to be a bit on the back burner where it's concerned, but it's something that viewers should keep in mind. But we've started to come in the thick of earnings. Avenue Supermarts wasn't the best set of numbers. The stock also hasn't reacted in the best fashion, but we haven't seen a material downtick when it comes to the stock.
I think the expectation was that the profit will be impacted. I mean, even though reporting a 15-16% revenue growth, it's almost a flat profit, while surprising is still something that the estimates were putting in for at least for DMart in this quarter.
Yeah, and I mean, let's think about this from a new age perspective, right? This is an old age business. Competing with the Zomatos and Swiggies of the world. Maybe it's not in the same cohort or in the same markets everywhere, but eventually you are going to start to see similar competition come in there as well. The fact that they require more floor space, they require more interiors in terms of capex, far more than what a dark store would require. But at the same time, maybe the recurring costs maybe are lower in comparison to having a fleet of people standing by and delivering. So it's pros and cons, but it's the same business model. You buy in bulk and you sell to customers. And while this one is profitable and maybe a Zomato and Swiggy are not, it's still a far cry in terms of competition which is coming in and valuations at which it trades at. So a lot of those factors are currently playing against an Avenue Supermarkets, even though it's a tested
twofold,
business.
right? Because it's also seeing competition from traditional players.
Yes.
And it's also seeing competition from the quick commerce guys. So I think the one interesting thing which was that it did report good growth in the DMart Ready business, which is their not a quick commerce, but it's their online portal. They're trying to build that up very aggressively. But I think still no sign of the company entering the quick commerce business. They're not seeing currently that viability coming in. And that's why they're still on the fence. And I think they've been on the fence till now. And I think they're continuing to, despite seeing that 80 basis point margin impact, they're now below 8% consistently over the last 2-3 quarters. And I think that will be a trend that might not change very quickly. But we've seen that in all these consumer players. Look at Trent also, the reaction we saw post, despite a 20% growth, that's still lower. While on some V2 as well as VMart, seeing those reactions, if that number is positive, the market is reacting. But unless that growth is coming in, people are very okay to sidestep even a material giant like DMart in this aspect.
Yeah, I mean, if we were just to compare the numbers of a V2 versus say a DMart versus say a Trent, and just broad level, if back of the head calculation that I can do, your DMart is currently trading at 100 times, giving you a mid-teens kind of growth rate. SSSG also isn't very impressive at all, and that's where the kicker generally lies, but that's just not there at this point. Urban consumption doesn't seem to be kicking through because you had someone like a Sula, which came out as well over the weekend and said that urban consumption hasn't come in. 8% degrowth on top line is what they reported. Now, when you're looking at the picture, therefore, it's not looking very pretty. You look at, in comparison to that, what a Titan has guided for. They've guided for 10x top line in 10 years, which is 25% CAGR, right? So their top line goes from around 25,000 crore currently to around 2.5 lakh crore. They do a 14 to 16% odd margin on the business that they do. And likely that a lot of that growth is likely sustainable. That's point number one. That's the big point. And second is, will come at a similar kind of a margin, hopefully, over the next 10 years. But who knows, right? Things change very
because
quickly.
For Titan also, the quarterly update was very disappointing. And we saw the sharp 4-5% reaction on that. So even a long-term guidance, similar to Trent, I think Trent has given that we'll go to 20%, 25% over the next 10 years. But if the short-term guidance is not being met, we are seeing that punishing impact coming, the punishing axe coming essentially on these stock prices.
Yeah, and then you have a 2 lakh crore market cap. You have around... even on a 2 lakh crore market cap, you'll at best do maybe 10,000 crore of EBITDA even 3 years from now, which is 20 times EBITDA. It's certainly not cheap, right? And then you have V2 retail, which is also trading at 100 times, but doing 50% growth. You know, so that, and along with it, the margins, and along with it, the number of store count that's going to grow. So all of that takes out the same store sales growth a little bit out of the way, because what essentially a V2 retail is saying is they're saying we have sub 200 stores today. We're going to go to 700 in the next, by FY 31, 32, which means that in the next 5 to 6 to 7 years, they'll do 100 stores every year, and their current base is only 189.
189,
So to do that kind of a clip likely means that how much of same store sales growth matters. Even the new stores coming in, even if those can provide enough fillip and kicker, the SSSG really is out of the way. It doesn't matter.
So it's similar to what Trent had given in 2018-19 when they started with Zudio, and then just that 5 years spree which they had on it. But there was an interesting question, and I'm taking a question because it's been highlighted by producers as well on the take on Infosys with a 5-year horizon. And the key aspect of why we're discussing IT is because the earnings season has just started, and now we saw the numbers from TCS, nothing great to report in those, but they did mention a few things about what they're anticipating in this year. They are seeing growth in this year, but that will come at least not in terms of employee benefits, certainly. So if you're a TCS employee, it's not a good time to be an employee there, but the wage hikes aren't coming. But it was interesting because they've been the pioneers of not delaying wage hikes even in uncertain environments, but they have decided to do that in this year. That's one. But largely on Infosys,
for the CEO though.
Not for the CEO.
The CEO gets a 40% hike, so that's
definitely
like, quite.
And that's similar to Infosys as well. That we Infosys has been notorious in the wage hike delays. Like for 2024 they skipped hikes. It's coming now sometime in January this year that they've decided to do it. But the results on 23rd. It's again not expected to be that strong in terms of Infosys. And in terms of guidance, though, I think the key aspect amongst the top 5 companies, Infosys might be the outperformer because of a lower base and also because of the guidance that they've given. 0 to 3% is the given. And Sajeet loves this topic that will it increase to 1 to 4, and the market will react very positively to that. If that happens, that'll be tough. But it could happen for Infosys in this particular quarter because 0 to 3 is much lower than what something like an HCL Tech is guiding. That's also expected to report results today. So both in terms of HCL and Tata Tech, I think the results are expected to be either flat or very negative. Like Tata Tech profit is expected to fall by 17% in this quarter.
Why is that so?
And that's largely because the growth hasn't come in for that company, and they're expecting a 6% fall in revenues because it's largely very auto centric. 80% revenue coming from auto. Europe is not doing well in terms of auto. So the VinFast contract has now concluded almost a ramp down stage. So both those aspects will not the 6% fall in revenue, and that's just not the operating deal is hitting both the EBITDA, the EBIT, as well as something like a profit. So I think the commentary will be something to watch out for in both these companies, especially for something like Tata Tech, if they are seeing some revival, because the R&D companies, KPIT Techs of the world, they're not seeing that kind of growth. So that will be one. But I think that's largely the sum up essentially of the IT pack. There's the numbers, the commentary matters more than the numbers, and the deal wins are the holy grail, to say the least, for these ones.
But let me be specific about this. And Anindya, if you liked our response, please, I urge you to hit like, because that means the world to us. But outside of that, I request the others also to hit like. Please share what we're doing if you like what we're doing. So hit the like button. We've been told by producers that they won't give us more questions till we get 30 likes, but we'll accommodate that. We'll convince them otherwise. But please hit like nonetheless.
Yeah.
Puneet, the real question is this, right? And we were having a conversation with Sandeep Agarwal of Sovilo Investment Managers, and what he was saying maybe on Friday was the fact that even if I take this sector with a 5-year view, and by this sector I mean large cap IT, there are maybe one or two companies at best which will do a double-digit growth on a CAGR basis. One, because there has been a significant increase in the base that you're looking at already. And second is because AI and all of the other variables are ensuring that there is going to be a cap with regard to cost. And whenever there's a cap on pricing pressure, you will likely not see a very rapid expansion either in top line, or even if you see that, you may not see it translate to bottom line profitability. So that's what his view was. Now, for a company or for a space which is trading at around 25 times odd, you may have a few which is trading below 20, but I'm saying broadly above 25 times. To say that I will get at best a double-digit top line growth at best, which is 10%, or maybe lesser than that, very likely trading at 25 times. It's a tad bit expensive.
Yeah. And with AI, the challenge is that all customers want integration of AI in their existing suite of products which they're already paying for. So you first have to get that right talent, invest in it, and then also have.
Please join.
We're doing an IT discussion. So it's like the customers are expecting AI suite of products in their existing ones, and the companies will have to invest heavily in that anyway. And they might not get an incremental return, at least in the short term, because customers want that AI suite already because their customers also are asking for it. So that kind of costing integration might take some time. And I think hence that view on preferring mid caps over large cap, because mid caps are still growing. Like you see Coforge is expected to show a stellar growth of over 30 to 40% because of acquisition. So we are looking at the mid cap ones, we are looking at inorganic growth and organic growth. And the inorganic growth is, of course, stellar, but the organic growth is much higher than compared to the large caps also. And hence that kind of target, like for Persistent, there are $1.4 billion in revenue. They're going to $2 billion in FY27 and 5 in FY31. So you have a company like Persistent giving us such a stellar roadmap. So it's trading at what, 45 times price to earnings. But when you take that revenue into the current numbers, of course, it's on you if you want to give that kind of valuation, and on you as well if you want to give that valuation.
But when Sajeet sir sits, everyone's starting to look cautious with regard to commentary given 5 years out.
5 years out.
Except defense companies. Defense companies, Sajeet sir is comfortable about.
Whatever.
Hard cash aa raha hai yaar. यहाँ पर the cash कहाँ आ रहा है?
Okay.
But
sorry.
But just to add to him, what he's saying is right. And I think we did a piece today in the morning on the site is there how mid-cap companies are taking away share from the top 6 large IT companies. 4 to 5% of market revenue market share has been taken away from by them. And while top 6 are growing at 32%, these the next 6, which is a mid-cap companies, are growing at 55%. From FY22 to FY25, and we haven't taken
55%.
55%. So imagine, the piece talks about how nimble and agile the mid caps are, and that's what clients are also wanting. They want more control on these companies or what the work they do, rather than some big company saying, "Oh, हम ऐसे ही करेंगे, और ऐसे ही लेना पड़ेगा." So that's something which is happening.
So the challenging the legacy way of doing business within the IT space.
But Puneet, want to switch over to Ola because I know that you are short on time.
I want to hear what he
has to say. I want to understand
why Ola stock is going up.
We should have done this talk before he came in. I mean, for Ola,
number revenue half हो गया, loss बढ़ गया, पर stock ऊपर है.
So worst is over. IT में कैसे होता है?
Bottom.
IT में कैसे होता है?
Bottom.
Same में.
Worst is over.
No, I feel like they've come out and the thing is they've come out and said that we'll sell 3.2 lakh vehicles this year. That's FY26.
3.2 lakhs का मतलब कितना होता है? 26,000 हर महीने.
More than that, I feel. So it'll be too much.
नहीं 26-27,000 हर महीने.
26-27,000 हर महीने.
27,000
I feel like that number is kind of currently under threat because the company did 18,000 last year in the most recent 19,000 something like that. They're doing roughly about 58. They did 58,000 units in this quarter. So they are anticipating a lot of growth to come in. So I think I'm taking it with a slight pinch of salt because the company said that they'll do. So they've given a one-time guidance actually for quarter one, 800 crores ka revenue that they've done, but they had
in June.
In quarter four, so sometime around April, May, जब भी उनका result आया था, they said that Q1 we are giving a one-time guidance of 800 to 850 crores of revenue. That's 50%
Did they meet?
Yeah, they met revenue guidance.
कितना मिला? कितना था revenue?
828 crores. But the largely they also said that they'll do 65,000 vehicle sales. That they did not meet. That came at 58. But I think this number market is taking and reacting to that as well. Ki they'll be able to do something like 320,000. So they still have to do like 270,000 in 9 months. That's still a very, very steep target, I feel, because TVS and Bajaj they've really eaten into the market share, and Ola has now slipped to the number 3 position.
10%.
And Ola is now the number 3 position in that space. So I just feel like it's going to be sort of difficult to the number seems lofty. They might be able to do it, but the kind of growth that like TVS and Bajaj has, I feel like it's going to be
one thing is clear.
difficult.
FY25 ke revenues to it won't be able to meet.
Yeah.
Right? Losses will continue in FY26.
Yeah.
Ending the FY. I don't know whether because they're claiming in the press release that they were EBITDA positive.
So the thing is, they are saying auto segment almost was EBITDA positive in June.
Auto
almost.
segment क्या होता है?
So auto segment is what the
auto company.
नहीं it's going to sell now ना.
हाँ?
Sell में जा रहा है ना.
Sell आया नहीं ना अभी तक.
अभी आ रहा है Q2 से.
जब आएगा ना तो auto segment मतलब क्या होता है यार ये
बताओ. So they give bifurcation of auto revenue and sell revenue. And sell revenue is thoda chota aspect. I'm just saying what the company is telling me, yaar. I'm saying the auto segment wala jo hai.
Right now you are representing the company, Puneet.
Yeah.
So tell the company, here's your sell.
This won't fit in the scooter. But my point is that they have said that the auto segment part will be EBITDA break-even sometime in this year and be cash flow positive generation. That's what
they're starting motorcycles in Q3.
Yeah.
So how will they be break-even? अच्छा वो auto नहीं वो motorbike segment होगा अलग से.
So one big difference. No, that's auto segment only. One big difference is
bike launch and they haven't even capitalized the expenses of
yeah.
So when they start selling, they will start capitalizing that. So वो भी loss होगा.
I feel like one big difference compared to last year is the Gen 3 model. The Gen 3 is lower in losses. Costing is also more efficient for them. And it's similar to what we saw in Bajaj. Bajaj launched the new Chetak. That's almost 35 to 40% lower cost compared to the previous version. That's what the company has said. So Ola has come out and said that last year we had the warranty cost issue of Gen 1, a similar issue in Gen 2. वो शायद ये with Ola Gen 3 नहीं होगा. That's what they have claimed. That with Gen 3 that won't happen. So the warranty expenses, which are a big aspect, almost 400-500 crores of warranty expenses that they had to pay last year, that won't happen this year, is what they are anticipating, and hence that kind of number is coming. But I think the call is scheduled at 2 p.m. for the company.
The stock is down 48% since the beginning of the year, even after today's 10% jump.
Yeah.
Simple as that.
At 10:30 it was
70% from the beginning of time.
Yeah. So it's like I think it was 157. The high was 157 for the company.
आज कितना है high?
आज का
44.7.
44.7. Yeah, so it's
4 रुपए बढ़ा है.
And I feel like the Aether is also doing actually pretty well.
Tell me one thing: if someone has to look at pure two-wheeler electric vehicle company, there are only two available here. Right? Means you have Bajaj and TVS, which are ICE and EV. इन दोनों के बीच में कौन सा बेटर लगता है?
मैं एक क्वेश्चन पूछूं आपको. Why do you want to look at a two-wheeler ICE EV company only?
No, मैं अगर किसी को खरीदना है
ऐसे जिद से नहीं.
I'm talking about जिद से नहीं.
सर मेरा पहले तो बोल रहे हैं कि गंदा कंपनी है, फिर गन पॉइंट में लेके बोल रहे हैं टू-व्हीलर खरीदो.
So my point is the number
one.
I'm
telling you that the future is EV. I'm not denying that part of it. I'm talking from a fundamental point of view. if someone wants to say that, okay, within the portfolio of two-wheelers, I also want to have a EV pure play in it, then I have only two options with me as of today, which is Ather and Ola. Between them, who is better?
So मेरा question भी तो वही है ना कि if you buy my question is this: if 100 scooters are selling, 24 TVS is selling, 22 Bajaj is selling, why do you want to bet on number 3 players who's selling 18 out of 100? And Ather is at 14, so 14% market share. Hero is aging very, and क्या है कि जो लास्ट 3 साल का मॉडल था कि पहला साल 2022 ओला वाज द हाईएस्ट इन टर्म्स ऑफ ग्रोथ, 23 टीवीएस वाज दिस थिंग, 24 में हमने बजाज का देखा है. सो बेसिकली एवरी ईयर जो सेकंड ईयर होता है दैट इज सो स्ट्रांग फॉर द कंपनीज बिकॉज़ दे हैव लॉन्च्ड, एंड आई थिंक हीरो का विल हैपन दिस ईयर एंड द नेक्स्ट ईयर. सो व्हाई डू यू वांट टू put your money on a number 3 player when you have all the number 1 players already profitable? Bajaj Auto is number 2 player.
I'm telling you from a point of view, not as an auto thing, but
as an investor also. Why do you want to buy a company?
Investor or some other investor, because they're the ones who are going to influence prices.
Institutional right? Is a different point of view.
Because they look at, okay, auto, and then they have renewable, and then they look at renewable में pure play कितना है, all those things, right? And that's how the buying comes into these stocks. Whether we like it or not, that's how the fund flows or the money flows into it. So they go into ICE इतना or renewable इतना. So between those two, which is much better, and because they are the better informed in terms of which one is there. So I'm asking you, from that point of view, how do you see both the metrics? Because one is asset light and one is asset heavy.
I think with Ather also, they are starting to build their own factory now with the IPO money. So some form of that will come in. I think with Ather, what they differentiate themselves that we are not an auto company, we are a tech company, and that's something that we've heard pehle also with others. So with Ola, I think the cash generation, if they'll be able to do it in this year in the second half as they're claiming, then we'll see the re-rating.
Cash generation hoga.
They say that the auto segment will have some cash generation in H2.
Because I think they're supposed to, they haven't even raised money for their cell business.
So cell they've invested, na? Cell they've invested.
But they still need to scale up the cell business, right? So at that time they said we will be going for debt, or maybe we'll come back to equity to for the capex.
I think right now, so that a little bit of those plans changed last quarter when they said that okay, we'll go till 1.5 gigawatt and then we'll go to 5 gigawatt. But the problem was that in their cell, they weren't getting that efficiency. They were at 67%. They wanted to go to 80 in Q1. So in this quarter, what I'm looking at is if they are saying that they'll do it from Q2, that we'll use our cells. The 4680. If they'll use that in their own scooters, then the other margin fill-up will come. So if they've achieved that efficiency to start from quarter 2, I think they might have, because they are saying that they'll start from quarter 2.
Will they be impacted in any way because of the rare material?
The companies actually said that they are already working on getting supplies, and they are very short of supplies. That's what they've said.
They're still working on
They're still working on it, but yeah, I mean, with all EV companies are expected to be impacted, especially electric two-wheelers, because it's a big aspect.
Tata Technologies?
We've spoken a bit about
a little bit.
We said that there's going to be a 17% decline in PAT, because of top line growth pressure. So we've kind of covered that. But producers, should we wind it, or should we
have questions?
Take more questions? Guys, please hit like if you've just joined us. It means the world to us, and also it keeps us supported in terms of the
our
platform.
Producers are very finicky about
they're quite strict. Otherwise, we'll have to wrap this show up, I guess. But please, producers, please share questions so that we can start taking those.
Amara Raja Energy. Is the transition to electric batteries going well? It's from Begin Dharan.
चालू नहीं किया ना अभी तो उन्होंने.
I think they were supposed to do it in Q2 or something, right?
Q4. They're investing in building another facility for EV batteries, and it'll come from quarter 4. I think before that, some aspect of the business got impacted. The telecom battery business got impacted for both Exide and Amara Raja. I think that's why you're seeing that reaction on the stock. It's sub 1,000 rupees now. Similar to what Exide is. So in this quarter, what I'm looking out for in this quarterly results is something what they can say on the traditional business, lead acid battery business, and also on the what they do on the telecom business, because the telecom battery business is very highly profitable for these companies. So if they can stabilize for the next 2 quarters this traditional business, I think the EV battery business, but right now it's not in the price, definitely. It's
Shubham, I
still
have a question on Sagility. You have a view on it?
no, Sagility I have not tracked that much.
But
Sagility, I think
it's a tech platform
Yeah,
giving
it's a tech
peer to
platform.
peer to
Yeah.
patient one. But I want to just highlight one thing which when I was speaking to Kriti Vasan of TCS. He said that after the big beautiful bill within the BFSI and insurance space, the payer industry has been impacted. And because they connect between payers and the customers or the patients, and they are the go between them, there could be some impact on which can come in. I don't know what is the extent of that which will come in, but that's what he was saying, that while BFSI में XYZ is doing well, but insurance में और या payer healthcare में ये काम नहीं कर रहा है. So that's something you need to watch out for. There's one on Gujarat Apollo and Ayush Wellness.
Sorry, I have to go for a link, but
please go.
Thanks so much, guys.
Thanks, Puneet, for coming in.
And we'll come back on Tata Tech
And yes,
and of course Ola. What's the kind of volume drop are you seeing on NSE and BSE, Kushal Dakalia? There's been muted volume.
You track volumes more. I don't track.
Yeah, I mean, cash market volumes have been much lower for last 1 week in that sense. But F&O volume premiums are almost okay. Means I'm not seeing a steep decline in F&O premium turnover which is there. Of course, there is HFTs are off the market. There is a July 1 circular which controls the kind of volumes that are coming in when there's no open-ended out of the money volume which is now getting there. Exchanges are going to do tracking of intraday position limits at least 3 or 4 times a day, and at the end of the day anyways is happening in that sense. So there is going to be some kind of volume monitoring, let me put it this way, instead of there. So let's see how it goes. We need to give some time to it. I don't think at this time we are seeing anything negative which is there, except for the market ही ठंडा पड़ा हुआ है. So volumes ऐसे ही कम है.
Yeah. I think that's the larger concern. I think we've been in a phase of consolidation.
Yeah.
But all of this will, guys, I mean, all of this will reflect only in Q2 numbers, right? So because Q1 wasn't exactly bad.
It wasn't because Jane Street happened on July 3rd, right? So it's going to have some impact on Q2 actually.
Yeah, so I mean, keep your eye out, factor that in as well. We're a good 3 months away from this really reflecting in numbers, if at all it were to continue. So
let's go faster. Abhinay Gupta is talking about what tariff rate going to start sell off on Indian markets. Market is expecting 25 to 30%, but tariff rate
you think there's going to be a sell off in Indian markets because of tariffs?
No, I don't think so. See, the thing is that we are asking for sub 10% or 0 tariff in many cases. If Trump is going to impose some tariff, it's going to be sub of 20%. That's one of the reports are saying, but that's speculative in nature as of now. The Indian team is currently in the US negotiating. That's what we heard over the weekend. And I think it's going to be a long drawn, well negotiated deal, because we are not going to give away on farm, agriculture and dairy. That's something which we are very categorical about. And let's see how much we are able to give in that sense, within that space which is there. So if it's going to be sub 20%, we should be okay, because given the fact that your competitors or competing countries around Asia are at much higher percentage. So that differential is there for you to make. You're still less expensive as compared to others.
Correct. You've missed one question, sir. Vigin Tharan said, why did MFI sector stress in NBFC balance sheet start in the first place? Vigin, and so please chip in. It was just the extremely strong growth that the MFI sector was facing. See, giving money, and this we've seen over the decades now, giving money is very, very easy. The problem is getting it back. So when you're giving money and you're saying, okay, I'm giving money to this shopkeeper, great, he has a recurring business, etc. Something were to happen in that particular geography and his business gets disrupted and he's unable to pay you back. So there was no caution with regard to lenders and how they were lending money. That was problem number one. Problem number two, there was a slush of liquidity till 2022, and I'm talking about FY 2022. There was a slush of global liquidity. So the capital adequacy ratios on some of these companies were 20, 25, 30, 35%. So they had the ability to lend, they had the balance sheet to lend, and there were borrowers sitting out there who were willing to borrow because rates were low. What thereafter unwound was rates started taking, that RBI started taking the repo higher because of inflation. So our repo went from 4% to 6.5% in a matter of a few quarters, and thereafter started the adverse cycle. So all of that kind of played out. Growth slowed down from that very low base of COVID when we saw a sharp spike, and thereafter growth slowed down a bit. Lending was happening at a rampant pace, and there was liquidity at that point of time. All of that has now unwound, and we are at probably the lower end of the spectrum where liquidity was low maybe a few months ago. The worst with regard to MFI was already being seen on the books of some of the lenders. But that is typical of investing in companies which lend to the microfinance industry. So it's not something which we've not seen. But the largest problem, according to me, was the kind of lending which they pushed out for nearly 2 years, which has kind of led to this situation. But
I have another question for you. HDB Financial, is it?
But so MFI.
I think you've said it, right? Means this is a pain which will be there for another 2 to 3 quarters.
No, I'm asking you because, sir, you've seen more cycles than me, and therefore,
I've seen the cycle when rates were much higher, and then suddenly one state imposes a restriction, and then you have RBI intervention, and then RBI caps rates. All those things I've seen.
Yeah.
But this is a space which is very tricky in the nature because it's all about trust. Means you are lending to people, and many of them are as part of the it's a small group of people who are lending, so that there's a peer pressure of paying it back, which is self-help groups, which you call it. And then many times if there is entire stress coming into them, then they're not able to pay back. But my biggest grouse for this sector is that there is no KYC that they do for lending, because many people have 3, 4, 5 loans simultaneously, and the industry is resisting narrowing down that. That's what my problem is. Why should you have 4 loans, MFI loans, with one person? You have the KYC, you have the technology today, you have wherewithal to figure out which person has how many loans, or which family has how many loans. Rather, in the MFI sector, it should be household based loans rather than individual based, because you can have 4 people and 4 loans. But does the household have the money to pay back? That's the question that needs to be asked. And that, I think the industry will have to come together and say that, okay, we will restrict our loan and limits accordingly. I think they're limiting it to 4 or 3 or something, right?
Yes, now they have.
Yeah.
Now they have less than 4.
Less than 4, but even that is high, right, for a household?
Yes, it is. So all of those factors actually contributed. Multiple loans from multiple people taking loan from one organization, repaying the other, taking multiple loans across organizations, not correct tracking happening. So all of those were lapses within the system.
There's a question for you. They're asking whether it's HDB Financial, whether one should hold for 1 year.
For 1 year, see guys, it's very difficult to call which way HDB will go over the next 1 year.
Look at the call, but from a financial point of view.
So from a financial point of view, I'll make it very easy. So it's at around 2100 crore in terms of profit after tax in the last year. I have extrapolated a very similar kind of profit after tax next year, which is FY26. But my view is that because the cycle is getting better, you might well see an improvement on that number. So you will actually see a possible inch up with regard to ROA. ROA has now bottomed, is my personal viewpoint and the viewpoint of a couple of other analysts on the street. So I get my viewpoint from them, where they are feeling that the bottom with regard to HDB is now. We'll likely see an inch up with regard to ROA. Maybe not as much as 3% ROA, but a gradual inch up, which will likely see profitability come back. So maybe over the next 1 year, it's looking, a lot of it is already built in. But if you're looking at a 3-year, 5-year horizon, it's definitely a decent investment to continue to hold if you already have. That's broadly the view coming in from most analysts. Like for example, an MK has a buy rating with a 900 rupee target price, 12 months. So 12 months it looks to some extent well priced. But beyond that, if what you're looking at, and then of course it depends on your return, it depends on the comfort you want, the risk reward, all of that. But those are some factors that you need to look out for. Why don't you I would also urge you to go and watch the KYC. Guys, always do a KYC on the stock that you're buying. So without that, don't buy a stock. Do your own KYC.
Yeah, I mean, he has given you 8 parameters. Look at those 8 parameters and you judge yourself.
Yes.
How much you should be giving.
Yes, absolutely. And where you stand and where peers stand and what are the other stocks available in similar same space at what valuation, and you'll likely make a decent return if that's the policy you follow.
They have a question. Bhumil Vakaria has a question. Please check Manorama Industries, cocoa butter substitute company.
Okay.
Please bring on KYC.
Yes, okay. We'll do that, Bhumil.
I was just looking at the
basic
numbers. It's 770 crores in top line, 25% of margins. PAT it's around 112 crores. And if I look at the market cap of this company, it should be somewhere around 9,000 crores. Market cap, and it's into, if I'm not wrong, it's into confectionery and other animal feed and other
for the raw material for the confectionery, I think.
Yeah, mostly
butter
butter. So something which is there, Manorama.
No, I've already put it on. We have an internal group on KYC. I've already put it on that group and requested the team to kind of get the management. So that's already done. So out of the way.
We will try to get the company and we'll talk to the company.
But sir, frankly, out of time as well. So I'll leave this with you. But
finish. I think we are almost done. Actually, there's nothing. There's one question on REITs and InvITs versus fixed income. Which would be the ideal pick?
Oh my God! Versus fixed income. Do you have a view?
I think
it's a tough one.
I will go for REITs and InvITs versus fixed income because it gives you a good distribution, which is well known how much distribution is going to come in, and there's a capital appreciation component which also comes into play.
Okay, understood. Got it. Yeah. So that's the take.
And there is DAM Capital, good numbers. I think it would be good because Q1 they did a lot of QIPs and others. They're involved in a lot of capital market deals. So I think
Q1. But the real pickup will happen in Q2 because that's where there's been much better activity.
So Q1 numbers should be inching up. I think whether it's going to be peak, I don't know. I'm looking from an anecdotal point of view. We've seen a lot of deals coming in from DAM Capital in Q1. So that's going to show some kind of improvement here. I think we are already out of time.
Yeah, completely stretched.
Yeah, and
but thank you guys for joining in. Thank you for hitting the like button. Thank you. Please share the content that we're making if you're liking it with someone you think this will be useful for. Please do your own KYC as well.
Yes.
Whenever it is that you're buying a stock, that's a key takeaway from today. That MFIs didn't do it, or rather, micro lenders to MFI didn't do it. You better do your KYC. Otherwise, you'll go down the same path as MFI has been.